Hi everyone. Welcome to the next edition of the Minute of Taxes. Today is actually video number 27, but today I'm not going to talk about what you need to know or what you need to do about taxes, or maybe about this program that I'm helping hundreds of business owners to get. I'm referring to PPP, ERDA, and whatever it comes with. So basically, today I want to share with you about something you should not do, something that you do not ever want to do again if you have done it in the past. So that's the reason why I record this video. Do not ever do this again if you have done that in the past, because the consequences are huge, okay? And the consequences are at many levels. So without further ado, I'm going to share the screen with you so I can actually let you know what I'm actually talking about, okay? What happened here? I don't know if you can see my screen right here. I have two different, random images that you may not actually understand what it means right here as I'm talking. But as I try to describe what I have on the screen, you will understand much better, okay? So I want to zoom a little bit this first picture, okay? You will tell me what you see. This is basically a Schedule C. If you are a business owner, a self-employer, or they call it single member LLC, this is what you have to use to file your taxes, right? It's called Schedule C. So if you have been filing your taxes without including this in your taxes, and you are a self-employer, sole proprietor, or you are a single member LLC, that means you have not been filing your business taxes, basically, okay? But the reason why I want to share this with you is not because you need this for your taxes. It's because of those signs that you can see on these random images, okay? So I'm going to share these images, this image. I'm going to switch. I'm going to go to this other image. I'm also going to put a zoom, and I want you to see something. Maybe you didn't notice anything at all, right? Even though I tried to highlight or try to put some sign on these two images, maybe you didn't notice nothing at all, okay? Especially if you're not an accountant or a CPA, okay? But what I want to share with you guys is it's crazy, okay? And I don't want that to happen to any business owner out there. I don't want you guys to do that. And I don't want it to happen to you. When I say I don't want to happen to you, it actually means because it could happen to you without you actually knowing. Because it happened to this one of my customers without him actually knowing what's going on. Okay, so, and that is the reason why I'm online. I'm on the Facebook and YouTube because I want you guys to avoid to fall on this trap. Okay, so what can we do now? So today, as I was helping one of my customers to apply for the PPP, and I noticed that there's a discrepancy between the tax document he gave me, which is, of course, the Schedule C is part of your tax document, which is this one. When they talk about Schedule C, we're talking about this thing right here on the left. I don't know if you're gonna see us right, but over here, this one, it says Schedule C. There's a discrepancy between what is on your Schedule C and what is actually on the document that you are, supposed to have been using to create this Schedule C. This right here is a document that the CPA who prepare this Schedule C is supposed to have been using to create this tax document, which is the Schedule C. So what happened? Now you may be understanding already what I'm trying to share with you guys here. The simple thing here is that the taxpayer, which is a business owner, he gave his tax document which is this document right here. I'm gonna zoom it again so you can see one more time. He gave this tax document to his CPA to actually conduct and prepare his taxes. You can see it's a 1099 miscellaneum. That means it's not a W-2. As a business owner, when you provide services and you're not paid by, W-2 or by paycheck, of course, at the end of the year, the person or the company you are providing service to will issue you a 1099. It could be a 1099K, it could be a 1099 miscellaneum, it could be a 1099, NEC, non-employee compensation. Either way, it's a 1099. That means you actually have to pay taxes on it because taxes was not collected. The tax was not collected on this income you are receiving. That's the reason why they're going to issue you a 1099 so that you can actually put this income that you receive as a gross in your Schedule C to actually come up with the net, which will be your taxable income, or which will be a part of the income to be added to your, to other source of income that you have in your taxes. So what happened here is that this person, he gave his 1099 to his tax professional to actually prepare his taxes. And, he was happy with the outcome of the taxes, right? Of course, when you guys are doing your taxes, the outcome is that you look at the return. But he didn't question the refund, basically. So when I was conducting his PPP, look at the information to prepare his PPP, I looked at this document here, which is the Schedule C. The gross here is what? 20,000. You guys can see. The gross is 20,000. It's right here, 20,000 as secondary rate. The gross here is 20,000. Okay? You can see here that the gross is 20,000. Everybody can see. Gross received, gross sale. That means everything that you receive from providing services is 20,000. But when I look at where the person actually came up with the 20,000, I was not able to find it. I was not able to find it. So I go back to the schedules, the miscellaneum, the 1099. When I look closely, I noticed that the income that this business owner received from this company was providing service to is 51,775. So how come you have an income of 51,000, but on your Schedule C, you only have 20,000 as the same supposedly gross? Okay, so the reason here is that the person who prepared this Schedule C is because he had in his mind that this 20,000 is what he wants the business owner, or maybe that is what the business owner wanted, okay? I don't know who wanted it, but the point is that the two people, the tax professional and the business owner, were trying to have 20,000 as a net. And that's the rest. Why am I saying that? I'm saying that because if you go down here, you will see the exact net. This is net income. You see net profit. This is the income that he was trying to be the income he wants to pay taxes on. But what is dangerous here is that you cannot do it this way. Why? Because you are not providing the information that was given to you in the document that the IRS actually has. The IRS has this document as a 51,000. How come you have a document that doesn't have nowhere we can find the same 51,000? Again, the reason here is because the tax professional, the taxpayer and the CPA, they wanted to actually have net income as the amount they want to pay taxes on. But when it's like that, what do you need to do? The simple thing you need to do is still to provide the same information that you have on your 1099, on your taxes. That's the simple thing you have to do. You have to put the same 51,000 in your taxes. There's no way you can have 51,000 and it doesn't show up on your Schedule C. That means you have 31,000 that you just cut from the income that is reported to the IRS. What does this mean? It means it's just a matter of time for the IRS to come after you and say, how come I have this 1099 that says that they gave you 51,000 and now you are only showing me 20,000 on your taxes? Okay. Again, the reason here is because the tax professional or the taxpayer didn't trace or didn't follow or didn't record his expenses. That's the first reason. And I always tell you guys, you need to record your expenses because look over here, there's no expenses. There's no expenses. So the taxpayer, the tax professional was trying to see how he can reduce the gross income so that the taxpayer doesn't have to pay too much taxes on the 51,000. He was trying to get some what is called write-off, but he is not a tax professional. That means he has done the write-off in his mind. That's why I told this guy that your tax professional actually was doing this write-off in his mind. So he took the 151,000 and he cut $30,000 from within his mind and he just put the remaining on the paper, which is just crazy because you should put those expenses, those write-off on your expenses, on your taxes, on your Schedule C. And he didn't do it because the taxpayer didn't give him no expenses at all, okay? So if there's no expenses, then you guys, you taxpayers should pay taxes on the whole 51,000, okay? So it happens so many times. This is at least the 15 person that happens to provide a tax document, a Schedule C document with no expenses at all, no expense whatsoever. So when you put like that, you are the only person in the world to know that it was 51,000 and you deduct 30,000 as a write-off. You are the only person in the world to know that, okay? So you have to provide your expenses on the paper. You as a taxpayer, always come up with expenses to give to the taxpayer to say these are the expenses that you have. Even though you didn't, actually record all those expenses, if you have an estimate, give them an estimate. Now, as a taxpayer, as a tax professional, the tax professional should actually do much better than this. I don't want to judge nobody. I'm not putting the fault on him. I'm putting the fault on the taxpayer in the sense that you should actually be able to understand your document because the taxpayer right here, in case of audit, he will tell the IRS auditor that this is what you gave him. He will say that you told him that. He will not even say that you gave him that document. He will say that the information that you gave him was 20,000. That's the reason why when you receive your tax document, you have to read it, or if you don't want to read it, ask your CPA to explain to you how we came up with the result. Do not just look at the result and be happy or be mad about the outcome of your taxes. If this person that asks the taxpayer, hey, how did you come up with 1,000 or 2,000 or 9,000 refund that I received? The taxpayer will be able to say, hey, listen, this is what I did. I reduced, I completely changed your income. The taxpayer will be like, okay, what are the consequences of you changing the income that I have? Don't you see that the IRS actually has this information and the tax professional will have done differently? Okay, he will be like, okay, provide me with those information, those write-off I should put here, I should put right here, because I'm this exclamation point, I'm asking myself, like, where are the expenses? And what are the consequences of doing such thing? The first consequence is the risk of audit, because this is a big red flag. You see, I put in red. This is a big red flag. It's impossible that somebody is conducting a business with a receipt, a gross receipt, that is exactly the same as what? The same as his net income. It's just impossible. And some people will be surprised that, oh, how come I'm audited? How come I'm audited? And actually, I'm saying that because I have at least 10 cases of this type of mistake on the taxes. And of course, it's a business when you have this mistake because it's, I'm going to charge you to help you. But I don't want that to happen. That's the reason why I'm making this video. When you take your, especially if you're a business owner, when you take your Schedule C, if it's a self-employed person, if you are doing Schedule C, look at your Schedule C. Look at the income that is claimed. If you have a document, maybe if you are just in the cash basis, that means sometimes you don't even receive, 1099 or stuff. Okay, you have the best estimate of what business you are doing. But if it's still, even though you don't have no 1099 coming from any third party, you should not just put the amount that you want to pay taxes as a gross income and also as a net. So that's the reason why I say do not ever do this again. When I say do it, it's you doing it. Guess what? It's not the tax professional doing it. He will say that you gave him the information that allows him to do this. That means it's you doing it. So I'm just begging you guys right here, if you ever watch my video, watch this, especially if you're a business owner, self-employed, sole proprietor, single member LLC, whatever the case may be. Even as a business, even a corporation, there's no way a corporation will just show the gross income with no expenses and the gross income will be the same as the net income. It's just impossible. So that's the first thing. It's a big red flag. Last year, I was talking to one of the customers from Maryland, and he was showing this thing of information. I said, when it's like that, it's more likely that you're going to be audited. And before I finished, she was like, yeah, the state of Maryland called me because he sent me an audit. He sent me a letter. I mean, I didn't even know he received a letter from that. So you guys need to pay attention. And the key is to track your expenses. If you are going to file your taxes and you have a book, even though you are using your hand to write down or you are using a software to track your expenses, do it. Do not just take a piece of paper and give it to your tax professional and say, okay, go and do my taxes. So how is he going to do? Is he going to estimate what was the gas that you put in your car? Is he going to estimate how much you spend to fix your car during the year? You are the best person to give that estimate if it was to be estimated. That's the reason why I say you guys need to pay attention to what you are doing. You need to understand what's the taxes. You need to understand what is going on when it comes to taxes. Otherwise, you are going to be putting yourself in danger. And it's just a matter of time. I'm working right now on somebody who is supposed to be paying $15,000 for taxes for a mistake made on his taxes in 2018. That is 3 years. So this is 2019. It's just this person just needs to pray every day when he goes to bed that they don't call him, because it's so obvious to have such thing like that. And when I ask him, he's like, I don't know what it is. So you guys have to understand, ask question. If you don't know nothing at all, ask your tax professional, can you explain to me how you came up with the result? This is the single question that will prompt your tax professional to be prompted, to be, compelled to explain to you how this happened, how your taxes happened, how your result or how the amount you owe came up to be. So this is what I want to share with you. The other loss, the other consequences is that there is a loss of the possible financing for your business. This lady or this man or this person right here, especially he is losing. Why? He's losing because his PPP has been calculated with $20,000. Okay, so his PPP is calculated with $20,000, whereas the real 1099 was actually $51,000. That means he's actually losing like 1.5 of what he was supposed to receive. As right here, this person is eligible on the PPP for only $4,000, whereas considering the real information, he should have been eligible for like $11,000. That's a $6,000 gap. This is on the PPP. On the EIDL, this person should be eligible for like 21,000, 25,000. Whereas with this situation, he only eligible for $10,000. You see why you're losing? Even without the PPP, if you were to go to the bank to say, I need to get a credit card, they're gonna ask for your tax document. Okay, when you put the debt, say that is $20,000, you're not making sales. That means you cannot pay back the loan or the credit card you are requesting for, which is not true because you are making 51,000. How are you going to do? How are you going to prove them that this is your own information? What you have to do, maybe you have to go back and amend your taxes and put the 51,000 back and pay the IRS the money, the tax you're supposed to pay on the 31,000. This is what you actually have to do to fix your situation if you want to be on the safe side of the law. If you don't do that, the only thing you have to do is to pay, because when they call you, of course, you're going to pay the taxes on the 31,000 plus penalty and plus interest. That's the reason I'm saying one more time, maybe the last time, do not ever do this again. If you have done that in the past, if you have never done that, do not ever do this, okay? So I don't know if you guys have a question. If you have a question, just drop the question down there. And the other thing is that if you want to partner with somebody else, the person will never partner with you, because compare 20,000 with 51,000. The person who has a Schedule C with 51,000 looks much better to partner with than the person who has a Schedule C with $20,000. If you're talking about which company is actually making sales, okay? So I didn't plan to be that long, but I hope you got at least one thing out of this. And if you're new to this channel, my name is Russell Folas. I'm a tax and accounting specialist. I help small businesses to actually understand what the tax is and mitigate the effect of taxes in the business. And if you are new, the only thing you have to do is to like and to change or comment, subscribe and share with somebody you think this information may be beneficial to. Until then, see you, and I love you guys. Ciao.